All right, folks, it's late night. It's time to cut the noise, the bullshit. No CNBC fluff, just straight data. And we're talking dark pool data in this video and what the biggest players in the world are doing with their money. We're breaking down the April 15th dark pool flow from our favorite data providers, Investor Central Club. We're seeing who's buying what, ETFs versus individual names, and where the real conviction lies. And yeah, some trade ideas for the people who are awake right now. So let's go. All right, let's go ahead and kick things off with ETFs. Here's what we saw. SPY, we saw over 290 million in dark pool flow across multiple prints. In QQQ, we saw $104 million blocks around 457.89 for the spot that those blocks were executed. VU, VTI, and DIA were all printing $60 million plus dollar prints each. SE, the Singapore ETF, saw $229 million in one single clip. Someone's getting aggressive. Now, here's what this really means. These aren't FOMO buys. This is strategic positioning, likely part of portfolio rebalancing or paired with puts. Most of these were tagged Form T prior reference price, aka negotiated trades done off exchange. That's not chasing, that's absolute control. You don't throw 145 million into SPY unless you're 1, hedging your book, 2, recycling capital, or 3, pairing it with options to structure exposure. So is it bullish? Not really, but it's not bearish either. It's neutral, smart money behavior. They want exposure, they just want it on their terms, which is the big key here. Now let's get into what actually matters. The individual names where whales are loading up right now. We had CSCO, $298.4 million block at the $520 or $52.72 level. Cisco, it's not sexy at all. It's an old people stock. It's looked at like it's IBM damn near. But this is a high dividend cash flow machine. Think infrastructure plus AI networking. Classic value growth rotation. Meta, we saw 121.2 million at the $512 level. Bro, this is like the 6th dark pool print on Meta in 2 weeks. They're not selling, they're building. Calls have already been flowing in hot, and this is just adding more confirmation to that. Amazon, we saw 67 million at the $181 level. You don't buy Amazon here unless you think Q1 earnings are going to beat or guidance pops up on this. And Salesforce, aka CRM, saw 70 million at the $254.93 level. Same story, cloud plus AI tie-in. Institutions are loading up under the surface. And then some notables, we had JD, Futu, and PDD. China tech prints, quiet but interesting. This space is bombed out. Whales might be speculating on a bounce or easing of US and China tensions. All these were Form T prints or Form T exempt, which means negotiated trades likely between funds, not retail, not guesswork here. Now, let's play it out clearly. ETF, we had SPY, 290 million, hedged passive exposure. QQQ, we had 104 million, which is just showing tech bets, but protected. We had SE, another ETF at 229 million. And this is a global shift with quiet hedging occurring. Cisco Systems is a defensive growth rotation. Meta is AI conviction long. Amazon is an earnings upside pop. And Salesforce is an AI cloud growth bet. So what is this telling us exactly? Institutions are holding beta with cautions via ETFs, deploying capital with conviction in selective names, and using dark pools to avoid moving markets while building their portfolio. And if you're not watching this, you're absolutely late. So want to take action on this? Here are some ways we could play it. For Meta, call spreads or stock plus downside protection targeting the $540 to $550 level in the next few weeks. So think the 25th and beyond. For Cisco, it's not sexy, but a great covered call candidate. You get the dividend plus premium plus upside if AI networking begins to ramp up here. SPY, be cautious. Don't chase upside with protection. Look at May puts or callers if you're being long heavy. And with Futu and JD, China exposures are risky, but reward potential is real only if you can stomach that volatility, though, and average down. This isn't financial advice, by the way, it's flow-based awareness. So, what did we learn here? Dark pool flow isn't magic, it's just a signal. Institutions don't chase, they build. And right now they're telling us, I'm not scared of the market, I'm just not buying everything anymore. They're picking winners, hedging losers, and staying tactical here. And that's how you should be trading too, especially as a retail trader. If you liked this breakdown, don't forget to drop a like, subscribe, or follow the pod because we drop this shit daily, folks. Share this with a friend who thinks volume is everything. And remember, price lies, but the flow never does. I'll see you next time and have a great night.